The altcoins drop, and we've seen the biggest liquidation event since 2021, and somehow the panic is back in the market. In this video, we're going to discuss what you should do on your journey throughout the bull and bear markets going into financial freedom. Let's get started. Before we get started, make sure to check out the third podcast of New Era Finance, which you can find in the description beneath. We've had a wonderful chat with Raoul Pal, and our fourth guest is also a very nice one. Guess in the comments beneath who we will be having as the fourth guest. And no, I've not been smoking weed. I'm actually just having an eye infection. So I just wanted to say that I'm completely fine, but just wanted to make sure that all the jokers in the comment section are not going to be funny anymore. Anyways, the markets have been correcting and they have been seeing a tremendous crash in the sense that we have seen 1.6 billion of cash being liquidated in this correction. And that was the biggest correction since 2021. And that tells a lot, especially if you look at the altcoin sentiment, and there's the nice altcoin indicator showing whether we are in a bull or in a bear market, or whether we're in a positive or negative sentiment for the altcoins. And just prior to the correction, we saw that the altcoin sentiment was going above 80. And it's an indicator between 0 to 100. Basically, between 0 to 25 is green and the best period to get into your positions. Above 75 is usually where you want to start taking profits, or you want to be a little bit more conservative on your entry points. And that is something you need to define when it comes to timing the markets. And we had a period of a very positive sentiment, which was due to the fact that Bitcoin broke through the all-time high and rallied to 100K. We saw an initial crash taking place on Bitcoin last week where it dropped by 10% in a single day. And now we saw that Bitcoin again lost 98K, causing the altcoins to do the exact same. And when the altcoins have such a flash crash, it is double-digit losses. They are dropping by 20%, they are dropping by 30%. And even in this case, we saw pretty big projects on Binance in the spot pair dropping by close to 50%. And the question then is, what is next? It's an ideal cocktail where the confidence is so high, everybody wants to be long, everybody and their mother wants to be long, and then they get wiped out of the markets, which is changing the dynamics of the momentum within the markets. And that's why earlier this week I posted a long read, which is about the altcoin market drops 30%, should you panic? And the primarily question that is going to raise during those periods, which is comparable to what we currently have in the title, which is it over? Are we going to have a continuation of the bear market here, which is comparable to the bear market PTSD that most people have? Or is it just a healthy correction and are we going to rotate back up? And this video is essentially created to give you a bit more guidance through those corrections. And it also tells you that what I posted in that tweet about rebalancing and compounding your profits, rebalancing in the sense that de-risking your portfolio on the way up and investing more on the way down, is the strategy to go for. Because what you usually will say is that if something goes up, you say, well, if it drops by 30%, that's the moment when I want to step in. But you're not aware of the fact that once it drops 30%, your entire surrounding, including social media, will say that it's over, or the correction will continue and you find a better position to get into. But if you erase all that noise and you use your rebalancing strategy, then you'll be able to reward yourself with profits and defending your risk. And you're able to, independent of what everybody is saying, to get back into the market through these corrections. And that is essentially the important part, in the sense that these corrections happen on a constant basis, but you need to look at what the fundamentals are saying, because price is usually having a gap between the fundamentals and the price. So You can have a period where fundamentals grow but price over exceeds and becomes irrational. But you can also have a period in time where the fundamentals are going to go well and price is going to stagnate beneath that actual equilibrium. So maybe, depending on the fundamentals, we are currently experiencing such a case in which, if we look at the fundamentals, we can see XRP is going to get a listing on the New York Stock Exchange, as Brad has been tweeting. That is super positive. And when we talk about XRP, we can also see that XRP has been having a very normal correction towards a higher time frame support level around $1.90, which is the previous area where we consolidated before it broke out again. And you need to be aware of the fact that when something goes vertical, then you need to step out and zoom out a little bit to define the higher time frame levels instead of the lower time frame levels, because they are more convenient to trade on. And especially if you want to get yourself into an XRP position, once it was going through those highs and was reaching $2.50 plus, there was the period where you saw those ridiculous numbers of saying XRP goes to 10K, XRP goes to $10 or even higher. But the risk of entering during that period is substantially higher. And when you have a correction of 30% or more, that is the actual moment where you want to get into, which we also defined on Twitter. The other thing is that the inflow on the Ethereum ETF is still very positive. At this point, we can see that still in the past weeks, we are having an inflow of more than $1 billion. And actually in the past week, we had a day of 400 million inflow. And on the 10th of December, the market crash day, we had 300 million of inflow in the Ethereum ETF. So that says the institutional investors are technically buying into the market at this point. And institutional investors really do not care about the market corrections on the short term. They play the long-term game. And that is something that you should be doing as well. So the next question is, what does this correction say to you and what should you do? Well, I often phrase the following, which is, if you are having positions, then having those positions is influencing your decision making, because usually you are referencing your previous P&L or previous all-time high, and then you're going to deduct the losses on that actual moment. But if you're going to have that strategy, then it's going to be a rough bear market for you, because that actual all-time high on your portfolio is just 1 second in time. After that, you will be down. And if that is going to influence your strategy, it is not the best way moving forward. So if we look at the current case, and if you want to look at the charts, look at it like if you don't have any positions. So if you're looking at them, and currently you're seeing a 30% correction on the markets, then in my opinion, I would be accumulating or buying into the markets. And if that is your entry, if you look at it from an objective perspective, then if you're holding altcoin positions, it's not time to sell them. And I wanted to use an example, which is Chainlink from the previous cycle, where Chainlink ran to $50 plus and has seen multiple runs. But in less than a year, it has seen more than 14, I think even more, flash crashes taking place. So more than once a month, these corrections take place. And I think 2 or 3 times a month, an altcoin drops by 20% or more. That is the roller coaster of being in the altcoins. That is the roller coaster of having risk in your portfolio. And that is also why having that rebalancing strategy as an important factor of making the most out of it, but taking control of your own risk appetite as well. So your strategy should be that if you want to have those altcoins in your portfolio, then especially at this point in time where we barely have been moving with the altcoins, it will be way crazier than what we've seen. Then at this point in time, you should be remaining patient and you should just be holding your positions. And the actual reasoning for that and the theory behind that, we're going to look at the charts. Hello, we have partnered with OKX, and if you sign up, you're going to get two important things, which is the lowest trading fees. Right now, we have the bull market, and I want to trade as much as I can. So I'm very happy with the lowest fees that I can get on OKX. And if you sign up, you can earn up to 270 euros in free money if you hold a certain amount of cash on the exchange. The link you can find beneath here. Make sure to sign up and have a wonderful time on OKX. Good things first, OKX is still available for this promo. Today is the last day. They extended it by 1 week. I know I said it last week as well, but today is the last day to join the promo. Also, if you're from Belgium, we've got two countries that can join. My own country, the Netherlands, and Belgium. So make sure to do it. It's actually one of the best exchanges out there. I really like what they have as an infrastructure. Now, I said we're going to be talking about the charts. And the first thing that I wanted to discuss is Bitcoin. And Bitcoin at this point has seen a samurai candle, as you can see in the middle of my screen. But the actual important part is the fact that we are in between decision making, which, if you go back in time, is very comparable to the structure that we had in November and December. I actually mentioned in the previous videos that we are likely going to have multiple flash crashes. And a flash crash is basically just a fast drop and then it continues to range. And as you can see here in November and December, we've had multiple of these pretty heavy red days taking place. And those red days are also happening on the altcoins. And it's constructing a bearish divergence which keeps on being invalidated. So at this point in time, if we go towards the Bitcoin chart, it is still grinding upwards. We got the bearish divergence. This one actually was valid, but we didn't create a lower low. And at this point in time, we are unsure whether the bearish divergence or the bullish divergence, the hidden one, is going to be important here. And I think that the longer we consolidate, the heavier the impact will be on the altcoins. And I'm not sure whether we're going to have this sweet spot here. Probably at some point in time we will. But at this point, having this correction caused the altcoins to correct and to have some more panic because it couldn't break through the important level at 101.5k. And I think that's the level that we need to break through. But if we look at ETH, for instance, I think we can clearly see that Ethereum, since the actual week took place of the elections and Trump won, we saw a pretty vertical price action in which we broke through the resistance. Actually, we broke through 2.7k, then we broke through the 3k barrier and ran all the way towards $4,000. And it's the first real test, which usually means that during those tests, you will see a lot of take profits taking place, and that causes the market to have some sort of correction, which is very similar to what we've seen in the previous year where we broke through a resistance zone and then had a correction and consolidation before we started to expand during January of 2024. And I think that is where we are at currently with the markets, especially if you look at the altcoin market cap against the US dollar. Then we've just witnessed 1, 2, 3, 4, 5 weeks of upside momentum where we didn't have any correction. And if we look at it from a TA perspective, then even having a further correction all the way towards 800 billion is a level that we should be looking at, and is still a valid argument for continuation. And you can see that during these upwards runs, we also had periods of consolidation before we continued the expansion. So in my opinion, it is just a period of having a substantial liquidity crunch or reset of the markets before we continue to have the actual upwards momentum. So I think this is actually fine. And also if you look at the altcoin markets divided by Bitcoin, then you can see that we have the longest bullish divergence since existence. And we finally started to have the actual bull market in altcoins, which is the previous time where we saw this was during September 2019, which was the actual low on the markets. And then we had a bull market for 2 years. As you can see, we peaked in November 2022, which is actually saying a bull market for 3 years. So in this case, we just barely broke out of the actual bear market trend, and there is way more upside to come, which means that if we make a higher low and have these corrections, then based from this thesis, these corrections are actually periods where you want to step into the markets if you didn't already. Now, if we look at the markets for Chainlink, for instance, then we need to go back in time in which we have this current case of 2021. I've shown it before that during those periods we are going to witness multiple corrections of anything between 30 to 70% or even more, which means that the coming period we're going to make more content based on the rebalancing structure, compounding your profits, de-risking, just to make sure that you've got a clear strategy taking place. But also if we look at Chainlink against USDT, we basically broke above the March high, and from there we had a pretty substantial correction taking place in which anything around this area of between $16 to $19 is where you want to step into the markets. And if you look at Chainlink against Bitcoin, for instance, then we essentially started to break out of the actual trend. We've got a massive bullish divergence here, and we're just looking for a higher low. And the same can be said about NEAR. NEAR has been seeing a very substantial correction in which we retested the level that we basically found as support during the period in January of 2024. We retested it, we ran up, we ran towards the resistance of the March high, couldn't break through it, so we needed to reset to fuel up again. And from there we started to break out. And now the question is actually, what is that going to mean for my portfolio, and how am I going to assess the current period? Well, if you look at Optimism as the prime case, then you can see that it technically didn't break out of any accumulation period at all. It has seen a very big crunch here in terms of sell-off, but it's just consolidating. And for me, you need to take this actual correction and just to be a little bit more patient, which means that it is just at the start. And the more that the Bitcoin paired charts or the USDT paired charts are going to look like XRP, the less you should be having into the markets. But if we look at the current accumulation for these charts, then also for Optimism, we're just having a retest of the previous area that used to be a resistance and is becoming support, and then it's fueling up for the next rally upward. So yes, it is a rough correction, but at this point it is just the start of this entire upwards trend for everything in the Ethereum ecosystem. And also Ether has been seeing a retest here at 0.04, a slight correction, and likely it's going to continue having a run back up to that resistance and then fueling up towards the next take profit area. And that is the one where I start to de-risk myself, in which we're going to discuss that in the next updates. Thank you very much for watching to this update. Make sure to stay calm, make sure to use these opportunities, and make sure to reach out to us if you want to have more service through our consultancy. It's the final month to get yourself onboarded. And also check out our next update on Sunday, where we discuss the markets, which I think will be trending higher. Ciao!